Back in March, as the unemployment rate started skyrocketing, states started placing halts on evictions. This was a move to keep people from becoming homeless in the middle of a global pandemic. Already more than a dozen states, including South Carolina, Virginia, Texas, and Wisconsin, have already allowed eviction proceedings to resume. By the end of July, almost no states will have eviction protections. On top of these eviction protections, the federal government and banks put a 3-month forbearance mortgage for people that couldn't pay. But with eviction holds coming to an end and mortgage forbearance coming due, plus people not getting back to work, we might soon see a lot of people not being able to pay for their homes anymore, creating a new housing crash. In this video, we're going to look at what this all means for renters and homeowners, the future of the economy, and how it affects government response going forward, and if it might be a good time to actually buy a new home. But before we get started, don't forget to like and subscribe to see more. Let's start off with the potential wave of evictions coming at the end of July, as states' mandated renter protections expire. During the illness, businesses were temporarily forced to shut down. Because of this, people couldn't work. During this time, 40 million people claimed unemployment. For people that didn't have the savings to weather the storm and were relying on a steady paycheck, this meant that they were in trouble, since they could no longer pay their bills, which include rent or mortgage. When this happens, it has a domino effect. If the tenant can't pay their rent, that means a landlord has to pay all the home expenses, including the mortgage. If the landlord doesn't have enough money to do this, however, it means the bank who services their loan won't be getting paid either. This means that the bank has to pay out of pocket to their investors, who bought those loans from the bank. This means the house will go into what is known as foreclosure, which is when the bank takes back possession of the home. The bank then sells the house for whatever it's worth to pay back their investors. This is fine when it happens every so often, but becomes a major issue when the market gets flooded with a bunch of homes for sale and no one who is looking to buy. This causes the price of the houses to plummet like they did in 2008, and this is a mess for everyone involved. To prevent this, a regulation was passed to temporarily freeze evictions. This meant that landlords could no longer evict their tenants for not paying rent. Homeowners who were impacted could request forbearance, which essentially means they put a pause on their mortgage payments and could work out a payment plan in the future. This solution just kicked the can down the road, and many people were left wondering what happens when the eviction freeze ends and forbearance is up and still no one has the means to pay. Doesn't this just mean that every landlord is just waiting for the freeze to end to start evicting their tenants that can't pay? Across the United States, eviction freezes are slowly being lifted, and this means landlords could start the eviction process for missed payments. As of now, it is estimated that 20 million renters could be at risk for eviction by September. Unfortunately, though, there's no simple solution to this problem. From a landlord's perspective, even though they have mortgage forbearance available, there are still other expenses such as property tax, insurance, and repairs on the home. All of these expenses can add up quickly, especially if you have no income coming in from that property. From the renter's perspective, they don't want to be evicted for no fault of their own. Plus, they still are legally responsible for all the rent you missed, even though you couldn't be evicted. So this is where we are right now, but realistically, though, I don't think the wave of mass evictions will be as bad as everyone makes it out. State and local governments have already stepped up and set up their own eviction assistance programs, which use some of the federal CARE Act stimulus money to help out renters. Also, with the extra $600 unemployment benefit, it definitely gave some people some cushion so they could find another job. There is also more talk about extra stimulus bill, which will help boost up the economy as people begin going back to work. This stimulus bill will most likely have some protection for both renters and homeowners, so this doesn't completely destroy the real estate market. But for now, it is up to the tenants and landlords to work out a deal to be able to bridge the gap between now and the next stimulus. All of this, however, doesn't even include the single-family homeowner who missed their mortgage payments. These people have the same forbearance options as the landlords do, as they too were affected by the shutdowns. It is unclear, though, as to how many people actually took the forbearance as precautionary measures rather than necessary measures, as they are not sure of the future of their income. Even though 4.3 million people miss their mortgage payments, it doesn't necessarily mean that they are all going to foreclose on their home. They could have just taken forbearance as a precaution. It is also good to note that active foreclosures are at their lowest point since 2000. I believe that a lot of these mortgages are going to stay current just with the missed payments being applied at the end of the loan, instead of paying it all at once in a lump sum at the end of the forbearance period. For example, if you miss 3 months of mortgage payments, that means that they will just be paying your mortgage 3 months later than previously. This will definitely prevent a wave of mass foreclosures as the media is predicting. So what does this mean for the overall economy? At this moment, it seems that the government and the Federal Reserve are doing anything in their power to stimulate the economy as much as possible. With this stimulus and the reopening, hopefully be enough for a majority of people to weather the storm and come out on the other side okay. If this happens, there won't be damage that can't be undone with some time. For people asking if this is a correct time to buy a new home, we are actually seeing a slight rise in home prices as the inventory for homes is so low. This is because many people didn't want to put their home for sale because they didn't want people in their homes. However, we might start to see more homes go up for sale as people might not be able to afford their houses if they lost their jobs. We are also seeing mass migration out of cities as jobs are becoming more remote. As this begins to happen, we might start to see prices in major cities decrease. As this begins to happen, we might start to see prices in major cities decrease. But the surrounding area of major cities, those home prices might start to increase. Also, with mortgage rates so low, home prices are increasing as it is very cheap to borrow money right now. Home prices and interest rates have an opposite correlation. If interest rates are low, home prices tend to be higher, and if interest rates are higher, home prices tend to be lower. If you are looking to buy a new home, I would suggest you might want to wait as the inventory picks up and the competition between bidders decreases. Overall, I'm hopeful that renter assistance programs step in and single-family homeowners work out a payment plan with their mortgage lenders. I don't think we'll see a mass wave of foreclosures like we saw in 2018, though. And with that being said, as always, thanks for watching, and if you enjoyed the video, like and subscribe to see more.